Hello friends, good week. Vladimir here with you and welcome to the weekly review for second week of August, 8th of August 2011. Well friends, what a weekend we have had. First of all, previous week. Crazy week with all the vote and the limit about the debt and everything went just suspicious until the new program approved by the Congress and the Senate. Now, what's next? During the next days, we saw that the market falls, despite the program, despite so optimistic, initial so optimistic signs from the market. The market fell down. Friday closed this way. This is the weekly chart. Can you see it? And this is how it looks like. This is exactly how it looks like. It broke the weekly uptrend line. The divergence is pushing it down. Now, for those of you who follow me for a long time, I've been talking since March, since February and March actually, that the stock market, that the indices are going to fall, are going to drop powerfully. I told you not once, and I will tell it again and again and again. Divergences never lie when it comes to this critical area. Now it broke down, it broke the support, it broke the trend line, it broke the Bollinger Bands and the RSI 50. How bearish is that? If all this is not enough, by the way, this is the S&P 500, okay, and just a default chart I put here, and I want today to start with indices because I think they will say a lot. If that's not enough, friends, during the weekend, S&P just reduced US credibility from AAA to 2A plus. From 3A, the perfect credibility, to 2A plus. How is that going to affect? Well, to be completely honest, I am sure it's going to continue the mess. I told you not once, it is summer. During summer, crazy things happen, always, right? And the market is not easy at all for trading. I am being very cautious, and all my trades are very small risk. I try to choose only those that look the best, and this one looks like the best, but don't forget that this chart looks like that just before what happened in with S&P. They reduced US from 3A to 2A plus. It is crazy. How it's going to affect the market? I think the market will continue to go down. But on the same time, I think the US dollar will go down. Sounds illogical, right? The markets will go down, the US dollar should gain strength. I think not, and I think the US dollar should continue to go down. Do I think it will change totally the market? No. If we take a look not on the weekly chart but on the monthly, we can see that the indicators are still bullish. The indicators are still bullish. Yes, we might go down, and I think we will go down once the monthly chart will break and close this 20 MA, which by the way still holds. I believe we will go for the lower boundary of the Bollinger Band. Yeah, maybe even lower, yes. But do I think from now for few years the markets will go and be bearish? No. History proved that all the countries that their credibility was reduced from 3A to 2A plus recovered, and actually the stock market and the indices were not affected too long. Right? Now I believe, once again, this is S&P 500. Of course you can see the same on Dow, and you can see the same on Nasdaq. Everywhere you just look. Everywhere you just look, the trend lines has been broken, as you can see also here, right? Has been broken. So are we going down? Well, once again, friends, I don't know how the market is going to be affected from the very opening, but technically it should go back little bit. I'm not sure even it will go to test the support, which was the support, now it's resistance around 12.14, maybe higher. I'm not sure of that, but technically it should, and then bam, should continue all the way down. Now remember, very important thing, after critical divergences, not first, not second, only maybe the third or the fourth critical support holds the market. Means this we can have the market going all the way down for 1,000 again, maybe even deeper. Of course, I don't believe it will going to happen in 1 week, but who knows? With such crazy fundamental news, everything just could happen. Everything just could happen. It dropped from 13 to 1200, even less, almost to 1150. Can't it drop in 1 week to 1000? Of course it can, easily. So I am bearish for the indices as long as the market holds below 1260. As long as the market will hold below 1260. So I will look to sell. I don't know how the market will open, but I will look to sell the indices if they retrace to test one of these resistances. Stop will be of course above 1320, which is this 20 MA, and of course target will be, as I said before, around 1000 level, this critical support area. The same with the Dow. It is crazy situation, friends. It is very bearish signs. Right? So this is about indices. Now let's try to see few interesting things on some pairs, and then, as I promised 2 weeks ago, I would like to discuss about some stocks. Okay, so now let's start with the euro dollar. Euro dollar is still on weekly triangle, or well, actually I'm not sure if it's triangle. It looks like some crazy sideways move. It is still here and still bullish because RSI is holding 50 again and again and again. During the days, it did not look like that, right? This is how it looked like. By the way, just before we discussed about this triangle, which did provide two false breaks, which is so rare. One on the false, on the negative break. Now here bullish also failed. This is, once again, friends, it's so rare, but this is summer. On summer, everything could happen. Now I believe the euro is now going up. This is, from my point of view, is last resistance can hold it. If we take a look on 4-hour chart, this is how it looks like. We have 1, 2, 3, 4, 5, 6, and then bam, 7. It should break up and continue up. I believe the euro will go once again 145.50 at least, and probably will go all the way back to 149, 150, and even maybe much higher. This is my expectation, but they could be changed after the beginning of the week. I want to see how the market reacts after this crazy stuff. What about the pound? Well, the same situation. It moved zigzag, up and down, up and down, up and down, holding the RSI 50. It looks like we will go up again. I would consider 165 as first target, but actually 167 probably even as first target, and the second, of course, I would bet even for 170 or even higher. It looks like we are going up now. I still will consider this weekly situation as possible double top with this divergence, but it is still early and it cannot work because only the MACD looks like the divergencing. RSI looks up, stochastic looks very bullish. So I think as for now we are bullish for the pound. We're bullish for the pound. Once again, as on the euro, same as here. You can drag this line here, right? And you can look for this channel. We have 1, 2, 3, 4, 5. Now 6. It might go a little down, and 7 break up, or just break with the 7th, which is also fine. So I am still bullish for the pound. Now what about other pairs? Euro pound, interesting pair as well, as long as it holds this 200 MA and has some kind, not serious, but some kind of divergence here. It might go incorrect at least to 0.8770, which is 20 MA, of course. Maybe even a little lower, 8760, and maybe even go deeper than to 0.8830. But long term, still bearish. Long term is still bearish. For bearish sign, very bearish sign, I would like for a close below this support line, cross of the 50 of the RSI, break of course below here. I think we can see some play around this level, maybe even head and shoulders being created on weekly chart, a little up and then the down move. Investors are still selling it. By the way, if we are talking about investors, they resell the euro franc. They have reached all their targets there, they resell it with stop loss at around 114, target maybe even below 1, maybe even below 1 for long run, as for now opened, and they just resell it. What are my opinions about it? Well, I would not do it because it could easily correct deeply for 20 MA, which is 113, and then continue down. Well, I will. This is the kind of pairs I will not touch actually. What about New Zealand and Australian, and what about the crosses, friends? It begins to be interesting. Pay attention for that. The uptrend line which stopped the New Zealandian, but pay attention for something very interesting. Despite of this bullish retrace with bullish hammer here, MACD slope is going down. MACD slope is just going down. What does it mean? Could it be bump and run? Run, bump. Down again, run, and bam, all the way down. If we take a look on monthly chart, there is monthly divergence here. It should correct down for 081, maybe 080, right? Based on weekly chart, it still didn't reach the 20 MA, right? Still didn't reach it, but still looks bullish though. No divergences, not MACD, not RSI, not stochastic, no divergences yet. It might correct, yes. It might be a little deeper for 081, maybe a little higher, and maybe even deeper to 080. But as for a long term, it looks like bullish yet. And if the US dollar will go and lose its power, this is exactly what's going to happen. About the Australian, also the one that holds 20 MA, still holds the support 200 MA, sorry, not the 20, still holds the support here, still did not break, could retrace and down. If it breaks down, I am pretty sure it's going to 102, maybe even deeper. But well, I don't believe it's going to be one way. Yes, I think it could correct deeper. I think it could go to 102, maybe even lower to parity level 1. But for me, as for now, long run looks like bullish yet. We have had a pretty amazing engulfing. It's not 3 candles, it's like 11 candles. All these candles are engulfed. It's a equal tails, but it's too deep, and usually after such dips and engulfing, the market first corrects and then continues. Now this is exactly what I expect as well. If you take a look on the 4-hour chart and follow this pair, we might have some divergence being completed and stopped here, divergence here, and maybe even stochastic new low, and then cross up with bullish divergence that should take us again to 105, maybe even a little higher, 105.50, and second target could stay open. What about crosses? Euro New Zealandian weekly, monthly bullish divergence, weekly engulfing, powerful engulfing, correction down, and then it should go up. From my point of view, I think this pair will go up for long run. Of course that during the week it might correct 600 pips down, of course. This is pound New Zealandian, and you should understand it, and you should remember that and respect it, right? But as it looks right now, I think that it's question of time until this pair will go all the way at least to 203, 204, maybe even much higher. If you take a look on the daily chart, it breaks this trend line. Never retested though. I don't think it's going to retest, but I do think it could retest, well, at least 200-300s down, and it could be nice buy call. Once again, next target would be next resistances. 2 is a good resistance, psychological, and of course 204, which will be 200 moving average on the daily chart. Amazing pair, looks amazing. Euro New Zealandian just the same, as you can see. A divergence that should take it all the way down after all this straight down move. Interesting, isn't it? Now another interesting pairs, Swiss yen for example. Well, still holds the monthly resistance, but this pair is not technical from my point of view anymore as for now. During the previous week, this was actually one of the most beautiful divergences to follow, but then it just bombed up because of the involving of francs, of Swiss government, and actually the interest rate they reduced, and from Japanese that just sold the Japanese yen to fight these pairs. Now it's not technical anymore. That's why I prefer not to look at it right now. I leave it until clearer things will happen. But definitely this pair will be interesting to follow for next. Dollar franc, if you pay attention on daily chart, now the MACD begins to change the slope. Stochastic crosses up again, stochastic divergence. If you go for 4-hour chart, there is some kind of, it was a double bottom here, but still never broken, right? There is a trend line that just holding this pair several times. A break above a retest should take us well, to 0.7850 at least, maybe even higher for next resistance 0.7950, and maybe even deeper for 0.8050. Follow this pair, it looks good. Now I promised some stocks, some interesting stocks, and here it is. Well, for those of you who follow me long run and from live room, you heard not once that I said IBM to sell. I was looking for good, reliable well, signals. It happened here with the Harami. Now pay attention, friends, for conservative, not aggressive, because, well, I love to be aggressive when it comes to divergences, but for conservative, look for a break below this trend line. As long as it holds, be careful. Once it breaks, it is bearish. Now another beautiful and interesting is, of course, Coca-Cola, which is one of the best and favorites, right? Stocks. Another one with divergence, right? Critical divergence. A break below will take us for a solid conservative sell. Until then, stay out. Well, unless you're crazy like me to take it from this Harami. But I guess not everyone is crazy like me, right? So those are the conservative interesting things I have to share. And now, of course, you have also Intel, right? You have also Intel here, the same stuff, same channels. You see, all move channel. Those are my preferred because, well, they are the biggest, right? If you take a look on General Electric, this one is just aiming down, and this one just, as you can see, broke the trend line. As the indices did, same did General Electric, right? General Electric. It is GE actually. Now retrace to retest it, and we are going down. The target from my point of view is 14, and stop loss is above 19. It looks good. Little retrace to around 17, maybe even higher to 17.20 should provide with good signal. With $2 as a stop loss and more than $3, which is 300 points, right? Per stock, of course, as targets. Now usually I don't talk about stocks, you know that, but now the market looks just good. But let's see how the market opens, friends. It's crazy situation, and I don't recommend to be in just because it could be just too risky. By the way, for those of you who was thinking about pound Australian, well, all those, of course, the same. Pound New Zealand in euro, New Zealand in euro, Australian, of course, pound Australian. I think we are going up, friends. These divergences are crazy, and we're going up. We're going up. There are 2, 3, 400 pips at least more for each of them. I think it's a change for long run direction for all this situation. That's all, friends. Thank you very much. I'm sorry for taking so long from your time. Thank you very much for watching this video. I will see you on the live room, and of course, let's wish for a beautiful week, friends. Just quick recommendation from the bottom of my heart: stay careful at the beginning of the week. It's just crazy stuff. We don't want to be in trend just because. Let's see how the market opens, how it behaves, and we will be much cleverer to join. As for now, all I predicted is based on technical analysis. All can change with the beginning. That's why if there are some things to update, just follow me on my live room. I will talk there about everything. Thank you very much once again for your time, friends. I wish you fabulous, fantastic week. Thank you. Bye bye. Vladimir.